Joining us next to talk about should I buy or build open banking is Kevin Guest, a financial services commercial advisor at Accenture. Hey,
Hi,
welcome.
how are you?
Hey, good. Thank you. Welcome back, rather. Yeah, it was a wonderful panel
Thank you.
discussion.
Yes, it was a good panel, very insightful. Um,
Yes.
but of course, the main things that everybody wants to know is should they build or should they buy it?
Yeah.
And what I don't have is a sense of the audience. Are they bankers or are they fintechs? What can you do? You have a bit of background on those who are on the call today?
So it's a mix actually. It's a mix.
Okay,
Yeah.
I'll try and keep it broad then as much as
Sure.
possible.
Great.
So
Thank you.
I've pulled
About
together.
you.
Thank you very much. So I've pulled together a quick sort of presentation, and these are just some of the highlights of things to think about. So I'll cover who I am and the big use case that I've looked after. Um, we'll just quickly refresh on open banking. I'm sure you should know by now, but it's always worth taking a different perspective on it. And then we'll jump straight into should you build or should you buy. We'll consider some of the macro factors that you need to think about. And then we'll think about some potential strategies, some successes, and what that could mean for you. So, moving on, I'm not sure who's driving the slide. I am. There we go. Right. So, I'm Kevin Guest. I've got 25 years within financial services as a commercial leader. Um, 15 of those years have been with two major high street banks within the UK, where I've led many initiatives on within data, payments, and other financial services. Um, Equally as well as that within fraud. And as everybody knows, fraud is a growing beast. For the last 2 years, I've worked specifically with a public sector client where we have implemented the biggest use case on open banking. Um, and to put that into perspective, this particular client um, is the largest payment acceptance company or institution in the UK, accepting over £650 billion a year. And so when we looked at open banking, what we had to think about was actually what's this going to do to our payment vehicle estate and the processes that exist already. Um, so a really good use case, and we'll talk about some of those benefits towards the back end. Um, to do to implement open banking, and you'll see the theme that thinks about this all the way through. There has to be a clear and defined vision and a clear and defined strategy. And so what I find often is that before we even get onto the conversation of should we build or buy, is there actually an appropriate strategy? And 9 times out of 10, there isn't. What you've got is a lot of excitement by the market about actually we should do this. We shouldn't lose out against our existing customer base. But actually, the critical thinking and the challenging thinking hasn't been done. So I spend a lot of my time working backwards to help everybody go forwards and very quickly. And when I talk very quickly, this doesn't require large investment. What you'll find is that this is actually quite quick to do and quite cheap. So hopefully that's given you a bit of overview as to who I am. So jumping back into open what, as I aptly call it, it's effectively a poor name, first and foremost, open banking. Nobody understands what it is. There's very little in terms of consumer awareness. But actually, at the heart of what it's trying to do, it's bringing together technology, data, social and digital change, and putting that into a way in which it can interact with customers in a seamless, frictionless way. Historically, we all know that to interact with our bank or our financial needs, we would typically just be subject to whatever solution was provided by that financial services organization. So whether that was telephone banking, and that still exists, whether that was a crudely put together app, whatever that might have been, they were the only methods. With open banking and consenting for the sharing of your data, there's so much more possibility. And on the right of this, I've illustrated the difference between the two very simple use case or approaches, I should say, which is the payment initiation approach. So how do you initiate a payment? And so that's buying things. And then account information. So how can I use real-time account information to help me inform about my financing decisions if I were a corporate to a customer, so a B2C environment. And can I just ask, if there are any questions, please do just put them in the chat, and I'll try and answer those as I go along if they're as they're relevant, or if I feel that actually something else is coming along, I'll address that as we move a little bit further. So jumping straight into the meat, should you build or should you buy? I've sat in front of many CFOs, CTOs, COOs, and they all talk about capability and capacity of existing teams and wanting to control and to build something themselves. And actually that's very courageous. And I use that word courageous because actually it's an unknown. It's not a known quantity as such, particularly in non-regulatory driven markets. In regulatory driven markets like the UK, there are standards. And even with those standards, and I gave the analogy on the previous panel, which is you've got a set of ingredients, and I go and ask you to go and cook me something, but actually what comes out of that is going to be, in a regulated environment, pretty similar, but there will be nuances. But in a market-driven environment, you can serve completely different dishes. And so to build or to buy is a really interesting question as to what type of market are you in, first and foremost. But as I say, CTOs will typically say, actually, we've got the capacity. And it's all well and good having the capacity, but do those resources have sufficient knowledge to cover compliance, IT architecture, risk, governance, security aspects of all the data that's being shared between the parties? Because of course, if anything is wrong, there are substantive fines for not doing it right, and nobody wants to be in that position. And quite frankly, for fintechs, for smaller banks, challenger banks, it could actually just close the bank entirely. So there's a huge risk. Counter to that, there is a lot of fintechs who have established themselves and they've got good practices. So there's an opportunity to potentially test and learn and integrate in a risk-averse way. So typically to build is costly. Having worked in the public sector for the last 2 years, if we talk about an innovative project, we prove the concept. That takes 9 to 12 months. Post proving the concept, we then go to build. Typically that is, for a large program, 12 to 18 months. The important part here is you're burning cost and resource just to get this thing up and running, when actually you can go to and learn from existing third-party providers who already quite quickly can integrate and do all of the heavy lifting. And of course, what you then have is a choice. How much do you do with them? How much do you control? And of course, control comes in many aspects, but the thing that I think most organizations who want to have open banking as part of their payment vehicle process, they want the control over the UX and the customer processes that fall behind the payment initiation or the account information services. So there's a lot of advantage to go and use existing setups to learn and then to determine, based on size, volume, what your next steps are. So we've quickly touched on the complexity. It is a significant undertaking. It will take time. And most importantly, you're going to have to stand in front of somebody and convince them that you want large amounts of investment that should be prioritized for this activity. And often, what is the unknown in this is the return on investment and the time frame for that return on investment. And one of the biggest issues in return on investment is awareness. And we talked about this in the previous panel as well, in that consumer awareness isn't there. If I said to most of the folk here, go home later tonight and talk to your families and ask them, do they understand what open banking is? You'll get a variety of responses. So general awareness at consumer-led level is poor. At corporate-led, that's slightly different. And that's being championed by many of the banks who are pushing forward the opportunity to work symbiotically in multiple marketplaces. Another area of complexity is the regulator and the regulations. Again, in the home market of the UK, the regulator is operating at an extreme pace of change. But just bear this in mind, open banking started 5 years ago here in the UK, and we're still touching the sides. And to give you a bit of volume on that, the public sector client I work for currently processes, which is the largest payment acceptance company in the UK, or institution in the UK, processes £650 billion a year. And open banking currently only represents 5.5 billion, so less than 3%. So there's a long way to go to be equal and to challenge existing payment vehicles, which I suppose is good news for card providers, card networks, and other institutions at this stage. But change is coming. Obviously, we talked about cost. If you're burning resource and you've got a team on standby to go through IT issues, changes that are brought down through the regulator, security risk, data monitoring and harvesting and analytics, it's a big cost to burn. And again, there's no guarantee on the return on investment. And we've quickly talked about consumer driven. It isn't there yet, but this is moving very, very rapidly into a consumer driven marketplace, whereby consumers will expect to be 24/7 connected and will be expected to integrate with multiple marketplaces and multiple services in their end-to-end journey or their end-to-end daily lives. So it's not something that you can just say, actually, I'm not interested in. This is going to happen. And the question is who's going to be one of the first adopters? Stepping back a little bit, this digital movement, certainly in the UK market and actually globally, has been impacted by some of the factors such as social side, the pandemic, in UK and Europe, the Brexit as we called it, so leaving the EU economy. So there's a lot of factors happening, and open banking is just one of those small items, one of those small macro items that are happening against a micro environment that is constantly changing. And it's worth just just quickly looking at this, you've got the four pillars: the regulatory, the economy, the social, and the technology. But there's so many new tools and innovation happening, and that's really good news for all global economies, in so much that there's a lot of investment, there's a lot of mergers and acquisitions. So it's an exciting time to be party to this. So of course, because there's so much going on, you really do need to think about whether you should build or buy, and whether actually, am I building something because I can, or actually, should I buy something because actually it's a lower point of entry, it's a lower risk, and it allows me to do some of these other activities, which I know, or focus on some of these other activities which I know are also going to impact my business. So what we do as consultants is we spend a lot of time working out, well, what is your strategy against all of these macro events that are occurring, and how can we ensure that actually against your strategic goals and objectives, that actually open banking is going to add value and provide the right impetus and impact to your organization. And I think this slide draws out that there's so much going on. So you've got payment architectures constantly changing across the world. You've got, everybody's heard of blockchain and distributed ledger technology, but now it's being implemented in existing infrastructures, and those legacy infrastructures are being changed. You've got, on the other side, you've got a connected society, which I talked about. So there's lots going on, and this is all being driven by new standards in API connectivity and connections. And I'm sure that there are much better experts than myself who can talk about connectivity and APIs. And I did hear about I was watching it with interest, that last presentation about ultimately, how do you monetize this? Because that's why businesses want open banking, because it's going to monetize something. It's either going to produce more margin, which is fantastic, or it's going to produce a new revenue stream that doesn't exist today. So this slide is really interesting, because often when I sit in front of CTOs, CFOs, and COOs, the one question they really want to ask is, where's the benefit? What's it going to mean if I invest? Whether I build or whether I go and buy, what's it going to mean for me? And for my public sector clients and some of the other clients that we've worked with, essentially what we've got here is a series of values and impacts to those values. So one, very simply, it's an alternative way of paying. The last time a new payment vehicle came out was, I think, about 20 years ago with contactless. And I still remember the Barclaycard advert for that. And now contactless has only just started to evolve again with new payment limits. But the good thing about open banking is, because of the way it connects and draws on data that exists with that customer, you get 0 errors, and that's extremely important. And to put that into perspective, the public sector client I worked for had over 2 million errors a year. 2 million errors a year. That's substantive. But with open banking, nearly 15 months into the process, there has not been a single error, not even a single call to the customer services team saying, we've got a problem. Nothing at all. Not a single other payment vehicle can boast that statistic. So it clearly works. And it works because it's consented data. Obviously, it's better secure, and with less mistakes. What you also are able to do is to pre-populate, but give the opportunity to the client to update some of those fields at the same time. So it's interactive, which is absolutely fantastic. If I go on to the right-hand side of this page, the statistics in 1 month of introducing to public sector 12,000 new users in 1 month, 15 million revenue throughput. Today, if you go to the bottom of that slide, it's 5.5 billion throughput. Okay, 5 million new digital users to the UK economy. So it's made a significant impact. But I remind you, it's less than 3% of the overall payment acceptance vehicles that we have. It's going to grow. So whether you choose to build or buy, there's a lot of debate, but ultimately it comes down to your strategy. Ultimately, it comes down to what you're prepared to control. Ultimately, it comes down to the volume that you have in terms of transactions that you might undertake. And this slide articulates some of those decisions that one could call winning strategies, if you will, and taken from Boston Consulting, which effectively, really and clearly shows that there are different ways in which financial services, and in this instance it's banks, can integrate with these new ecosystems and marketplaces. So are they at one extreme creating a brand new business, or are they on the other extreme really just integrating with existing markets and offering new services or integrated services with those customers? There is a question, so I'm just going to pause. Is there a question? Sorry.
Yeah, Kevin.
Okay.
So this is your experience, and what you spoke about is predominantly from HMRC's point of view, right? What you did for HMRC. So from that perspective, I have a question on has the HMRC seen any increase in compliance? Because tax is something the non-compliance part comes into play, right? So because it's seamless, because it goes from my account and automatically. Do I end up paying tax in a more? Do I become a better taxpayer
A
in
better
terms of?
taxpayer. It's an interesting question, and I'm sure you do pay your taxes, and that would be a different meeting. I think, or I'll just bring my friends in. So I think the answer is can be segmented into several factors. From an open banking perspective, the critical thing here is ensuring that the process of moving data from one party to another is done in a secure way and is done error-free. And that's what open banking can bring. So a really simple example is using a traditional bank transfer method. I've already set up my sort code and account number for the payee. It already has last year's reference number. I put the amount in and press go. Of course, that then becomes an unallocated payment. And as a consequence of that, we then have caseworkers trying to work behind the scenes in connecting the dots for that payment against the wrong UTR number. What do we do? And ultimately that leads to a heavy deployment on resource at peak time when tax is due. Open banking solves that problem because it connects through APIs to the UTR, so unique tax reference database, and pulls that information in first and foremost, and then presents it back through the journey. And of course, the customer is in complete control of the consent and the approach. So the second part I just probably draw upon is awareness. So there aren't any complaints, but equally, awareness is low, and you see that in the numbers that I discussed. And of course, public sector hasn't gone out and done a big marketing campaign that like you'd see the banks do. They haven't gone out and tried to sell open banking as the newest way to make payments. They've simply just let it organically grow. So
Mhm.
if you can imagine that you've gone from, we're now month 15, we've gone from nothing to 5.5 billion value in 15 months throughput. That's an amazing
Right.
achievement. But more importantly, bringing on board 5 million new customers who may or may not want to have digital IDs with us.
Correct.
So you don't need a digital ID to affect a open banking payment in
Mhm.
for the completion of tax, and that's another really positive factor that they decoupled, so it can be used, but also you don't have to go through the digital identification process.
Okay. Yeah. Got it. Uh,
Um, so,
yes.
are there any other questions?
No, nothing else. Yeah. That's
Okay, and how are we doing for time?
yes, we are. We have overshot the time, at least 3-4 minutes.
Oh, okay. Um, I think I'd like to finish off is in so much that there is no sort of silver bullet as to whether you should build or buy. It really
Mhm.
comes down to the organisation and the appetite of the investors. What I would say is that there are a lot of good fintechs. Um, there are many opportunities to work with them and to test and scale to your appetite and to your investment criterion. Um, there's also a lot of experts in the market, which I find quite staggering because actually open banking is less than 5 years old in totality. There's very few who have delivered substantive use cases, um, but awareness is growing. And folk like myself and others who have been on panels and individuals, um, they're really trying to promote the adoption of this new technology, but also future technology that's going to come downstream. So I'd end by saying there are some absolutely excellent advisory services out there who claim to know everything, but really just question if you are going to use consultancies, um, what have they actually delivered? Can they demonstrate that volume and capacity um, that's been delivered and delivered to any form of substantive scale? My personal focus is around helping businesses grow and expand their existing strategies first and foremost. Open banking is one of those strategies that has some traction at the moment. I'm sure it'll be something else soon.
Yes.
But whilst it's here, let's embrace that technology and let's work together to evolve.
Sure. Thanks, Kevin. Thanks for giving those, food for thoughts in terms of a buy or versus build. Appreciate it. Thank you for joining
Excellent.
us at Apidays Dubai and Middle East. Thank you.
Thank you very much for the invite. Bye for now.
Yeah.